I want to take a look at a REIT, or real estate investment trust, that just announced a generous dividend raise. I believe this company has solid long-term potential with a wide moat, and its valuation has recently become attractive for dividend growth investors. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor, just a guy who wants to share my love of dividend growth investing and building financial independence with passive income. REITs are awesome for dividend investors because they are required to pay out 90% of their earnings back to investors. It's a way to own real estate without taking on debt or having the duties of a landlord, and it works the same as owning any other stock. Of course, there are tax implications to be aware of. Dividends from REITs are non-qualified, meaning they are taxed as ordinary income. This makes them ideal for tax-advantaged accounts, such as a Roth IRA. The majority of the REITs I own myself are in retirement accounts for this very reason. Now, I want to hear in the comments, what REITs do you own? One industry that has been popular with dividend investors over the years has been telecoms. This industry has been dead money for investors for the last several years, disappointing many of us. Shares of Verizon are down 33% over the last year and down 21% over the last 10 years. Dead money. Competitor AT&T, well, they are down 12% this year, but long-term, they've been an even worse investment. They're down 35% over the last 10 years, including a dividend cut. Both companies pay a high dividend and both have their issues, but investors looking to get exposure to this market do have other options. One way is to invest in companies that own and operate the cell towers and the wireless communications infrastructure that companies like AT&T and Verizon lease for their services. Two companies that come to mind are real estate investment trust Crown Castle and American Tower, and I think both of these companies are better investments than the Verizons and AT&Ts of the world. But for today's video, we're going to focus on Crown Castle, ticker CCI. Based in Houston, Texas, Crown Castle owns, operates, and leases more than 40,000 cell towers and over 80,000 route miles of fiber, supporting small cells and fiber solutions across every major U.S. market. If you live in the States, it's highly likely this company is quietly involved in your everyday life. Competitor American Tower, although the name would suggest otherwise, is more focused on international, while much of its business is overseas, while Crown Castle is primarily domestic. This stock, just like AT&T and Verizon, is down big recently. Over the course of 2022, it's down 37%, much of that in September and October. At the time of publishing, it's right off its 52-week low. One of the big drivers of this price drop, I believe, is the dramatic increase in interest rates, bringing down share prices for many REITs and increasing their interest expenses. Despite the difficulties this year, Crown Castle just announced a dividend raise, and it's a generous one at 7%. This puts the forward dividend yield right around 5%. This high of a yield combined with a healthy dividend growth are exactly the types of companies I am looking for in my own dividend portfolios. Now, CCI is down big recently as noted, but zooming out, it's done far better than AT&T or Verizon. On the 5-year, it's up 18% despite all the recent drama, and on the 10-year, it's up about 86%. This is a yield we've not been able to get ever with this stock. Granted, there's only 7 years of history of paying and growing dividends. Crown Castle became a REIT in 2014. The 5-year average dividend yield is 3.37%, with the current being 5.07%, and that is 50% above the 5-year average. This is an indication of an undervalued company. If we look at CCI's forward price to adjusted funds from operations, the 5-year average is 23.1, and the current P to A FFO is 16.3. This is another metric we can use for valuation, and by this we are undervalued again. This looks like a safe dividend with a payout ratio of 79% of adjusted funds from operations. Adjusted funds from operations is similar to free cash flow for REITs. Simply Safe Dividends provides a safety score of 61, which is safe. Doesn't look like the dividend is in any danger at this time. The dividend is paid out quarterly in the months of March, June, September, and December in the amount of $1.56 for an annual payout of $6.26. The dividend growth is healthy for the short track record it owns. Dividend growth is at a rate of 9% over the last 5 years. You're not going to see this with AT&T or Verizon. Long term, their dividend growth target is 7 to 8% annually, and I think it's reasonable to assume it could be a little lower over the next couple years due to the rates being at higher levels. Revenue growth has been excellent over the previous decade. CCI had $2.43 billion in sales for fiscal year 2012, and for fiscal year 2022, we are looking at $6.88 billion in revenue. Wall Street analysts rate the stock a buy with a grade of 3.58 out of 5. 17 analysts have covered in the last 90 days. 5 see it as a strong buy, 5 as a buy, 4 as a hold, 1 as a sell, and 2 as a strong sell. The average analyst price target is $162.50. Every analyst sees the stock higher than its current price. Now, I did a dividend discount model valuation. In some of my videos, you see where I have the spreadsheet and I take 6 different valuations and I average them together. REITs are a little different, and since this is a dividend channel, I'm going to highlight the use of the dividend discount model to determine a fair value. And this gives us the fair value of future dividends at present day value. Dividend growth has been around 9% per year, and its latest increase was 6.5%. Now, they say they are aiming for a 7 to 8% increase every year. I'm going to be a little more conservative with my estimates going forward, and this would give us a reasonable margin of safety. I'm going to assume a 5% growth rate going forward. Looks reasonable to me. I'll use a discount rate of 9%, and this gives us a fair value of $164.33, which represents 32% potential upside from its current price of $123.59. So I consider this REIT a buy. I don't own it myself, but I do wish I did. I would love to get into the cell towers, either CCI or AT&T. Maybe someday I'll own a piece of this business. There's just only so many that we can be buying at a time, right? But thanks for joining us here, folks. Please smash that like and subscribe for future videos. I'll have an update of our public dividend growth income portfolio for its first month of existence coming up. Really exciting stuff, but more interesting dividend content to come. Please check me out on Twitter as well at DivGrowthIncome. I love connecting with you guys. Thank you so much. Until next time, guys, keep investing.